Hello everyone. The best investment opportunity often arises when excellent stocks available at very great price. Today I want to discuss one such company called Avas Finance, an affordable housing finance company. And this is the fifth stock in my next multi-bagger portfolio series. And there's a compelling reason why I had included this Avas Finance in my list. See, the India's mortgage to GDP ratio is currently around 11%, while in developed countries it is typically above 50%. In United States of America, this is somewhere around 52%. The significant structural tailwind is a game changer for the housing finance sector in India. Aavas Finance experienced a remarkable rally after its IPO. However, the stock price has fallen nearly 50% from the last few years. The question here is this a golden opportunity to invest in this company or is it a potential value trap? But before dive into the Avas Finance, if you find the content valuable, please take a moment to hit the like button. It helps us tremendously in bringing you more insights like this. Quick reminder, this is only for the educational purpose and not intended to give any investment advice. Please consult your financial advisor before making any investment decision. So, Avas Finance is a housing finance company that oriented as a subsidiary of AU Small Finance Bank in 2011. You might be wondering what sets Avas Finance apart in the market. Numerous housing finance companies are there, and banks are also offering the house loans. But here is the answer. The answer lies in their business model. Avas primarily caters to the low and middle class segment in semi urban and rural areas. These individuals may not have the conventional income proof documents such as tax returns or salary slips, which make them financially excluded by larger housing finance companies or banks. The average loan size of Avas Finance is in FY23 was around 10 lakh rupees, targeting low ticket loans for low middle class income customers. Approximately about 70% of their loans are home loans and maybe remaining 30% are mortgage loans. In terms of occupation, 60% of their customers are self-employed and 40% of them are salaried employees. As the geographical presence, it has 364 branches across the India and they are not entered into markets like Telangana, Andhra Pradesh, which I was living at, but they will be entering as soon as the real estate prices go up. So see here the company financials, their revenues. I will be going to discuss them. Now, so first and foremost, let me show you the numbers of Avas Finance. If you go through their balance sheet, you will see that company has done fairly well even during the COVID period. Now look at the last 10 years of performance. Let us quickly check about the past 10 years data. You will see that the compound sales growth is somewhere around 57% and compound profit growth in these 10 years is 72%, right? It's like absolute crazy. The last 3 years compound sales is somewhere around 21% and their compound profit growth is somewhere around 20%, which is very reasonable. See, you might think the growth has declined, but the sales in the COVID time is absolutely zero. Like there is no real estate activity was gone in that COVID period. There was a massive crushing of growth rate for all these companies, all housing finance companies. Now, same like commodities like gold, silver, steel, The real estate also has cycle, but we don't observe it. The interesting thing about this real estate is the real estate cycle is very long, like 6 to 10 years long. And in fact, it goes up, it goes down for next 6 years, and after 6 years it's going to be again pushed up. This is like up and down, same like commodities. These are very cyclic in nature. And also, there is some guidelines from the RBI that you should increase the interest rates like 6.6% because of some inflation is going on. That's the next problem. So the first problem is there is no real estate in the COVID time, so it affected Awas finance. The second thing is that there was some interest rate hike by RBI. Is this going to never ending story? No. It is going to end somewhere. You should consider the Awas finance. You have to view in this context. The loans they provide is mortgage based loans, which means they had backed by the borrower's property. So if borrowers are unable to pay, the company can take the property and recover the outstanding amount. This makes the company's NPA levels relatively low to the other finance companies. The big investors, like what, whenever take it, the big investors buy at very dead cheap price. If there is a massive correction, they will be looking forward to buy that stock. If you check the PE ratio of the stock, it is somewhere around 29, and see, it is the lowest PE ratio that this stock ever had. If you have recently, I had recently purchased it about 1 or 1.5 months back, and I'm sitting at a 10% of profit, and I'm happy to aggregate more positions on it because I know this company is well regulated by RBI, and there is a very good profit margins if they give the loans backed by mortgages. So to conclude these business fundamentals, my point of view is very clear. There is no issue with the company. They are very good. The leadership is very good. So there is no problem with the leadership. There is no problem with the company, and there is no problem with the fundamentals and financials. What do you want? What do you want when you are investing in a company like this? So please make your own decision, do your own due diligence, and consult your financial advisor before making any investment decisions. If you like this video, please press the like button, and if you found valuable, please consider sharing it with your friends. I will be back with another video. Until then, take care.